Hello traders, this is another edition of Stray Dog's weekly videos and with default subject bigger picture on indices, and again I will cover US indices like S&P, Nasdaq, Russell, also VIX, and a short look at oil to see what happened in the previous week, and at the end of the video I will cover German DAX. So there will be charts from bigger time frames, from larger time frames, and from smaller time frames. All of these markets, the stock markets, keeps grinding higher, and it is very, in my opinion, very important to not mix volume with direction, because markets now are grinding higher. Obviously with lower volume these prices are not so attractive, and we cannot really expect high volume at these levels, but nevertheless they are going to be directional and they can grind higher for a longer time than expected. The question remains here, are markets still divergent? Because we have seen a very large divergence, especially between S&P and Russell. And about DAX and Germany, we will have a very busy earnings week in Germany. Let's go to the charts. This is the S&P daily chart. In USA, earnings of the larger companies and the market movers companies are already over, and next week is going to be packed with earnings, but I think only Walt Disney on Wednesday in the after hours is the company that can move markets. And about news also nothing much. There will be several FOMC members speaking this week, and Fed Chair Powell speaking on Thursday before the open. And besides that, we will have on Monday vaccine services PMI in China early in the morning, and nothing else. So markets probably will lack some news to push them, unless something big is going to happen with US-China talks, but I can't really imagine that all of that is not already calculated in the price. So markets really been all over the place this previous week. S&P made, as you can see here on the daily chart, first is a false break above the previous all-time high, and in this period of time after the FOMC statement on May the 1st, it was looking like this, like it could be some bearish signal that maybe market could make a bigger pullback, but none of that happened, and on Friday they peaked above this previous all-time high level from previous year. So nothing was decisive here, and it is a similar situation like this here. So this resistance was tested multiple times, as you can see, 1, 2, 3, 4, 5. This was the sixth test. They went higher than below at this period of time. It was a chance here for all of this to be a false breakout, but it didn't, and they moved higher. Nasdaq is looking much more bullish than the S&P. With this is a classic back test of the previous all-time high level here. And this is also interesting how it looks on smaller time frames. This is the 4-hour chart. This here is pretty much looking like some kind of bull flag, with great chance that Nasdaq will continue higher. Now this is challenging now to trade indices that are in the new all-time highs territory. So basically there is nothing higher, no resistance whatsoever, and in that case it is very useful then to look what is the current 8-year of the instrument. So this is the Nasdaq. Okay, so what is the current 8-year? As we can see now, it is 90 points. And as you can see here, this is the December lows, and similar to volume, 8-year will drop as the market goes higher. And it is also logical, because the biggest daily moves are those that are made when market's going down and when people are going to liquidate in panic. and not here when you observe these smaller candles to the upside that are grinding. Back to the S&P. So as said here, this is the difference between S&P and Nasdaq, and now it is a question, do these divergence, especially between S&P and this, is very important, and the question of course is not who let the dogs out, but is it sustainable? And I think there is a good chance that this move is sustainable, because this here resistance, it corresponds with this resistance on the S&P, and Russell is lagging big time. Russell is really lagging big time behind the S&P, and Russell has tested its own resistance around 1600 for multiple times with no results, and now they made it above it. And if you turn on to see moving averages, daily 50 and daily 200, which makes sense currently only on Russell, because Nasdaq is way above it and the S&P is way above it, but Russell keeps finding support here in previous days and weeks, and it's lasting for many days, really, this testing. And now on Friday they made a really good move above it and found support here on the cross of the 250. So there could be a move, bigger move to the upside, as said in the previous several weekly videos, when we were observing this kind of situation for many days, that this is a possibility, and now it is happening. And I think it really doesn't matter if this is going to succeed or fail. I think the first test of this resistance, first pullback, is a buy. First pullback is going to be long, in my opinion, and after that we're going to see what will happen. So obviously first scenario is, since this here, let's observe that on the weekly chart. This here is really, there is really not much of the resistance here, and as you can see, this move here consists, basically majority of this move is these 2 weeks, and we are already inside this second one. So only 1 week of price action was here, a very swift week to the downside. It could be a swift week to the upside also. Resistance could be back testing of this trend line. Look how good this channel is. So it could go, let's say, to here and then maybe roll over. But Russell, yes, it is a risk proxy, but Russell is also a follower of the S&P, and often it is very good idea to watch what this Russell small cap index is doing, because it is perceived as a risk proxy, as something that will give you a bigger bang for a buck, but now it is really lagging behind. So S&P obviously has a target around 3000 level. When we see this trend line, its target is around 3000, and I have seen on many places that people will look at these weekly candles and then make a conclusion. Then this is a hanging man, or this is this or that, bullish, bearish, and so on. And when you observe this and with no bias, then you will see that those kind of candles we already had. So a candle like this, that, well, it's like some kind of doji or hanging man or whatever. Here it is. Here it is. After that it was a move higher. Then here. Then here. So we had candles like that, and really nothing happens except grinding higher. On the Nasdaq also. Here it is. Now we got a candle like this. It doesn't have to be anything bearish here. Here it is again. and on Russell it looks pretty bullish. But as always, how some individual candle looks like doesn't really have to be any good information for you. It is just one piece of the puzzle and nothing else. And that goes also for the bearish divergence. As we can observe here, this move higher on Nasdaq, it came with the bearish divergence. On the S&P also, on the Russell also, on German DAX also. So all of these moves came with the bearish divergence, but yet market grinding higher. So all of that is some pieces of smaller pieces of information. And again, do not mix volume with direction. Yes, volume is going down, 8-year is going down, market is going up with bearish divergence. All of that stands, but it is very hard for us to guess where the top could be. And again, there is two scenarios for this. This here could at the end be a false break, that it could die somewhere here below this line, and S&P, let's say, bang the 300, and if S&P turns hard to the downside, then below this is an area between 1585 to 1600. If it goes below it, that could be a very bearish signal for Russell, and could mean it will retest this December lows. So that is the second scenario, that is the bearish scenario. The bullish scenario is grinding higher, small pullback here, and then grinds higher above the all-time high and make a new all-time highs following Nasdaq and S&P. At the end, a short look at the VIX daily chart. So really nothing much to conclude here. VIX is still printing very low values, and we can see that with the current 8-year that is shrinking and the lack of volatility on the markets. So this is not, of course, not supportive of the bearish scenario, but note that bearish scenarios are the ones that are happens sudden and when nobody expecting it. So it is also a good idea to keep a close eye to the VIX. On the crude light chart, I will just show it this once more time, because it was in the last weekly video. So after this here false break above this resistance level, which was correlating with the 61.8 Fibonacci retracement, we had, as you can see here, a small move again above the 61.8 and then rejection here on Thursday. So this could move lower, especially if they can manage to break this absolute channel in the first few days of the next week, and maybe go lower to test the this lower Fib retracements. So this is about US markets, and now let's observe what DAX is doing, and first to take a look on the busy earnings week in Germany. Okay, so here we are on the German DAX, and German DAX also grinded higher on the bearish divergence, which is clearly seen here on this for our chart. However, this larger time frame resistance on DAX between the 12,360 and 460, so this is a 100-point wide resistance zone. It is looking now that it really wants to grind its way through it, and after multiple tests, we have this 1, 2, 3, 4th test of this zone. It is now looking like it wants to go higher, and this leg, if we are going to observe this down leg on the daily chart, so this is here, this is that zone, a good push now through the zone, and again, same as on Russell, two scenarios. This could go higher to test this second high here, which is around 12,600, and then maybe go even higher, or make a false break here. Now note that Confirmation of the false break is going below this lower end of this zone, so below 360, because this is the zone for the from the higher time frames chart. And on the index chart, so DAX has filled this gap here from September 27th. It has filled it on Friday. I will delete it now. And now we have a couple more gaps to the upside that are not very far from the current price. So here is the next one of 12,494, then on 562, then on 676. Note that all gaps do not have to be filled. I'm tracking these DAX gaps from very long time, and we had a situation here on these lower prices in December when DAX filled two gaps that were unfilled from 2 years behind, so from December 2016, and they filled it in December 2018. But they're still, you can see, if I'm gonna go scroll to the downside, there are gaps from 2014, 2013, and all the way to 2009. So gaps are here also to take note of, and gaps are going to act as a magnet if they are in the vicinity of the price and in the way of the price, like this here, these three gaps here. So market is going to the upside. These can again act as a magnet and as some areas and reference lines that markets want to test. On a weekly chart, very strong weeks on DAX, and DAX that was a market underperformer and really lagging big time behind the S&P is now catching up. That is obvious. So again, two scenarios on DAX also. One is to go at least to this first high here, and in that way to fill these first two gaps above. That is the scenario number one, and scenario number two, of course, is the false breakout and then a failure. In that case, in case of the failure, we already discussed that this one could be a target, so test of this low range, top of this blue range here, or to go to test this area here, which was a very good, as we can observe here, support, resistance, support. So multiple touches here. This acts as an axis line. So in case of some bigger failure above here and go below, so look above and fail, in that case we could get a bigger push to the downside. But for now, all of this looks like a coiling for a DAX to make a bigger move to the upside. And as said here, this is the first target, so 12,600 could be a target, and then we go higher and higher with our targets and follow the price. Just trade what you see and trade what is in front of you. DAX is also grinding higher with the lower volume. DAX is also the one with the dropping ATR, and that is all. That is normal. Now, in your free time, you can observe these charts, these larger time frame charts, and to see how volume and ATRs behave in a different period of time and of market behavior. And that is all for this weekly videos. And once again, if you are into the DAX trading, if you're interested into the DAX trading, you can see my site. It is straightdogtrading.com. I'm running the daily dose of DAX service, which is an analytical service for DAX day traders and swing traders, and you can find all about my service here on the homepage of this site. That is it for this edition of weekly videos. I wish you a good weekend and good trading.